it's undeniable that the cycle is maturing. You know, by this time in previous cycles, price would really start be popping off to extreme premiums to cost of production. So that where we are in the cycle, to me, based on price performance, is signaling that something in the cycle is changing. The People's Reserve Bitcoin bond is designed to unlock that equity. The maturation value plus the interest paid over that 5-year note time will equal your principal investment, which was the 500,000. Raising Bitcoin up, officially evolving it from that digital gold to pristine collateral. Not that just you can borrow against your Bitcoin, but that you can borrow against your Bitcoin at the most competitive interest rate in the world. If you're in Bitcoin, you should run a node. The amount of nodes there are relative to Bitcoin users is not good enough. So my position would be, if you want to take away op return data limits, do it when Bitcoin's at the top of the S curve. Because at the top of the S curve, you have taken away all bad actor incentive. They hate that the wealth gap between the 1% and the normal person is growing. They hate that so much that it drives them to love Bitcoin because it solves that problem.
Hi, CGK. Welcome back on the show.
Hello, hello. Thanks for having me back. It's great to be back. Man, you've been killing it. I love what you're doing for the community, and you deserve all the success that you have and that you continue to grow with.
Oh, thank you so much. Yeah, it's the third time. I think you're the first guest that has been on a second time, and you're also the first guest that has been now on a third time. You only you beat Gary Cardone for like 2 weeks, so I will have in 2 weeks Gary Cardone as a third time on. So yeah, it's really great to have you, and I always enjoy talking with you.
Oh, perfect. You know, it's funny. I actually met Gary at a Naples Bitcoin conference, and we sat at the same table, and they had this acronym competition. And Gary, myself, and Trey Sellers from Unchained, we ended up winning the competition. And the acronym we came up with was for Bitcoin is buy it today because opportunity is now. And I think that conference was taking place with Bitcoin like under $30,000. So not only did we come up with a great acronym, but we were right. And Bitcoin is chugging along, baby.
Amazing. On that topic, on that note, what are you currently most bullish on? I think it has been like half a year, like maybe 8 months, something like that, since you last been on.
Yeah. Oh, so much has happened. I mean, it's funny. Like you look at human years and dog years, right? And dog years is like you get 1 year of dog years, 7 human years, they say, right? Well, it's like the same thing with like traditional finance and Bitcoin. What we see going on in Bitcoin, it's like 7 years of things happen in 1 year in Bitcoin. And TradFi is just, they've had it good for so long that they're oblivious to what's happening. It's amazing that Bitcoin is well over $100,000 after dipping from 100 down to 70, with many, many people calling for lower lows and an elongated bear market. It just turns out that we just happen to be right back where we were. So all of that happening over that course of the time frame, you know, the thing that I find interesting is that, to me, it's undeniable that the cycle is maturing. You know, by this time in previous cycles, price would really start be popping off to extreme premiums to cost of production. I mean, extreme premiums. And in some cases, depending on your setup, and even if you don't use cost of production, but you use Bitcoin fair value, price is still at a discount to Bitcoin fair value. So some miners are kind of barely profitable, looking in that 80 to 95,000 range, depending on your setup and your OPEX and CAPEX costs. So at small premiums, and then based on Bitcoin fair value, still at extreme discounts. So where we are in the cycle, to me, based on price performance, is signaling that something in the cycle is changing. And to me, it goes back to what I said before, which is, yeah, we're moving out of the commodity phase and we're moving into the money phase. So we're no longer going to go in this real short commodity cycle, but through the monetization and financialization of Bitcoin, we're now moving into a credit cycle. And that's what you're seeing right now. A bunch of Bitcoin lending companies are now starting to get into the game. We've seen Jack Mallers hop out and talk about Strike's lending product. We have other lending companies getting into the game. We have Bitcoin Treasury companies doing reverse mergers and accelerating that. So on all fronts, the monetization and financialization of Bitcoin is accelerating. I believe those are the main drivers that are actually leading to the change, or I would say the maturation of the cycle itself, where we get these boring periods. You know, Bitcoin went up to 108, 109. came back down to the mid low 70s, and in previous cycles, this correction would not have lasted this long. We would have corrected that big, players would have been washed out, and we would have ripped back up a lot faster. But the distribution phase in these cycles is showing you that it's no longer OGs and whales and exchanges and free market makers playing in this market. There are big institutional players, institutional accumulators, and therefore the supply demand dynamics are changing, and the cycle dynamics are changing with that supply demand dynamic. So it's exciting to be a Bitcoiner at this time, because I don't think we're going to get those big pullbacks that everybody has anticipated in the past. Sure, we're going to get the pullbacks. That's the regular part of price discovery. But truly, we are watching the maturation of the marketplace, of the asset class, through the monetization and financialization of Bitcoin. And I think, with People's Reserve advent later this summer, raising Bitcoin up, officially evolving it from that digital gold to pristine collateral. Not that just you can borrow against your Bitcoin, but that you can borrow against your Bitcoin at the most competitive interest rate in the world.
Really interesting. I love that you say like commodity to money cycle, which is super interesting, and don't hear a lot of people talk about that. What are the implications that we're now in this money cycle? You already talked about the lower pullbacks, but is this like bigger institutional players? I also saw the same thing where like, okay, we are seeing a bull run, but the excitement is not there from a retail crowd. I feel like if you look at Google Trends, it's like very low. And it's also, I don't know if you have experienced the same thing, but when I looked outside of the Bitcoin bubble, when we first reached, I think like 5th of December, the 100K mark, nobody cared outside of Bitcoin. Like nobody was like, yeah, of course, 100K. Like people were like, that's the normalest thing ever. I thought 100K is like a huge point for the mainstream media.
Yeah, absolutely. Nobody, I mean, in Bitcoin X, we're all excited. We know what's happening. We're watching it happen with our own eyes. And it feels like a fairy tale. You go out to a family event or a church event or with your friends, and nobody's talking about Bitcoin. Nobody is talking about what's happening in the financial system. Most people, if they're talking about anything, happens to be, at least here in the United States, happens to be with like Trump tariffs. And some people are actually getting into interest rates, which is, it's pretty funny to hear normal people talk about interest rates and bond vigilantes and lack of Treasury debt. So it's amazing how the conversation in the mainstream has matured itself. But at the same time, it's like they really don't understand what they're talking about, right? It's like every once in a while you get that trending topic, and then everybody becomes a professional doctor or a professional lawyer because the topic is trending and everybody's got to put in their opinion. And we're not anywhere near that right now. Like, you get lucky if you hear a Bitcoin conversation. You get lucky if you hear a economic or interest rate conversation. But you are starting to hear them, and that rate of luck is starting to increase, which I think is a signal that things are really going to start heating up here. And unfortunately, $100,000, a lot of people think that that's a lot of money for a Bitcoin, so they're waiting, right? If Bitcoin's 103, it's 104. That's so expensive. I'll just wait for it to come back down. But in my opinion, the way I see this playing out is the next stop for Bitcoin is the price of a single family home. And that's when I think regular people are going to wake up, at least here in the United States. I think the median price of a single family home here in the United States is like 400 to 450,000. So I anticipate that when Bitcoin gets to 400 to 450,000, a lot more people are going to be paying attention, because once we go beyond that level, it's going to be almost impossible for the everyday person to accumulate a whole Bitcoin. I mean, Janet Yellen, who was not my favorite Secretary of the Treasury, she did have at least one good quote. And that quote was that Americans' most important source of wealth is in their home equity. So in order for a person to buy a home, most people are using a mortgage. And then that home becomes almost like their savings account. And it takes a lifetime. It takes 30-year mortgages, 30-year pledge of working and paying to accumulate your home. Well, Bitcoin is about to cost more than a home. And I think that realization of, wow, I thought the most expensive thing I would have to pay for in my life is my home. But instead, it's actually going to be access to savings technology, because we live in a world where the ability to save has been stripped away by the system itself. And in order for the system to maintain a semblance, I don't want to say stability. Let's say in order for the system to maintain status quo, they're going to need to keep printing money. Therefore, there is no savings vehicle in the world that lets you outpace inflation, the true rate of inflation, which is the expansion of currency units. So Bitcoin being this savings technology, I think that's in our minds, like in Bitcoiners' minds, yeah, we're going from digital gold to pristine collateral. But if I go up to a normal person and say the words pristine collateral, they'll look back at me like I'm speaking another language. They have no idea what that means. But when they realize that, hey, it's harder to accumulate one Bitcoin than it is a single family home, that's going to set off some of the light bulbs and help people understand what's really happening here. So it's really interesting that it took 16 years to go from zero to $100,000. What about the next $100,000? I think we can get the next $100,000 in less than 16 months. So 16 years to get the first 100,000, most likely less than 16 months to get the second 100,000. And then from that point forward, the only way is up, especially with the way the U.S. administration is talking about Bitcoin. Global adoption of Bitcoin is going up. The supply is just not there. And at some point in time, we will have a repricing of the entire asset class. And that's the move you don't want to miss, because it's going to be much higher than a single family home. I think we go to the 7-digit level, and that will be your next psychological level, that $1 million level, where we have to have another thing since we hit 100, right? We first hit 100 and we mellow out, we go through distribution, we bounce up and down. I think single family home, million, distribution, mellow out. And that mellowing out could take a while, or it could accelerate through. I don't know. These Bitcoin treasury companies, I think, are the variable that we need to keep our eyes on, because remember, it's not just retail anymore. It's not just the mom and pops who are going to wake up. It's going to be the rest of the world. It's going to be all of the small and medium-sized businesses. Every single publicly traded company that you know or has a ticker is going to play a role in accumulating Bitcoin, because if they don't, they're going to get left behind.
I love the importance of this, like, one Bitcoin. And I don't know, it's an arbitrary number. Like, you could pick any number, but like round numbers are really important for human psychology. And I think a lot of people still have the goal of like getting to one Bitcoin. And let's be honest, like 100K is for the average person almost unreachable already. I mean, maybe for the average person in the US it's possible, but like average person worldwide, it's very hard for them already to get like the one Bitcoin. And it's super interesting that you cap that with like a single family home, because I think that's like a really good comparison. A lot of, I don't know how it is in America, but probably the same thing as you already said. In Austria and in Europe, it's like the home is kind of your savings account and your pension plan. And this couldn't, I really think we should now shift to Bitcoin. That might have been a good strategy like 50 years ago. But now Bitcoin is kind of the better strategy, and getting one Bitcoin above the value of a single family home will also put it closer and closer to gold, closer and closer to be the single most valuable asset. I think that's also another flipping point. When Bitcoin flips gold, that will be massive also.
Yeah, I mean that's a 10x from here. So if we want to flip gold, we got to get over $20 trillion market cap, and I think gold's well above 20 trillion right now where it's trading, which is a clear signal to the marketplace. You know, Fed chairs have always, if you go back and you read some of their work or listen to what they've said, the best ones always looked at gold to measure monetary policy. And if you can make the dollar stable against gold, you have proper monetary policy. But if the price of gold is going up against the dollar, then the policy is too loose. You need to tighten, and you need to strengthen the dollar and bring the gold price back down. But as you well know, we cannot do that here in the United States. We cannot raise interest rates. Number one, because the entire real estate market here in the United States is frozen. Most people during the zero interest rate policy years were able to attain a very low interest rate. I mean, some of them as low as 2%, but most in the 2 to 4% area. Today, if you want to get a mortgage in the United States and you have a pretty decent credit score, you're going to be in like the 6 to 7 or 8% range, depending on your credit score and relationship with the bank. So the most qualified buyers are getting in that 6% range. And that is 50% more than the 4% of the higher end range of before. So those higher qualified borrowers, they're in the 2 to 3% range. And maybe they've been doing well and they want to upgrade from, they started out in a 2,000 square foot single family home. They upgraded to a 4,000 square foot home, and now their family's grown a little bit and they're looking to get into a bigger home with some more space, maybe a space with an extra property for some people that work on the property to take care of it and help the family out. And they're looking to make that move, but they can't. And then, so the people who are just trying to get in the game, forget about it. They can't even get access to credit to buy the real estate. So that's why that's the real reason the market is frozen. So it's kind of like this magic point in time where we have a frozen real estate market, and Bitcoin has the potential to soar past the price of that home. Because for any saver, anybody who is saving to buy a home, regardless of what country you're in, there's one thing that you understand. It's going to take more than a couple of years to save up to actually buy the home. And then over those course of years, the value of the home, the size of the home continues to go down, right? So the price of the home continues to go up. Therefore, the square footage that you can attain with your purchasing power goes down because the prices of the home are going up faster than wages. And there's no way to outpace that. And that's the real magic, I think, that Bitcoin has here through people's reserve. There's coming a new narrative that we haven't seen before, which bridges Bitcoin powered finance to the real world assets. And, there's a big narrative in crypto about real world assets, but there hasn't really been that killer app yet because there's been no way to really connect the two. Tokenization of assets and all this other stuff doesn't really empower the individual. It might empower the corporation or a group of investors, but it's not financial engineering for retail, right? It's financial engineering for corporations and institutions. And at People's Reserve, we focus on financial engineering for retail. We want to make sure that you are empowered by Bitcoin. So now what we want to see become synonymous is that when you want to buy a home, the first thing you comes to your mind is, well, I better start saving in Bitcoin because Bitcoin is what's going to get me access to credit. And Bitcoin is what's going to give me the ability to save in a timely manner to purchase my home and to afford my home because these homes are unaffordable. The market is frozen because of the interest rates. And even if the Fed lowers interest rates, prices are still so high right now that if they start lowering interest rates, demand will go up. That will push prices up. And the new base, very quickly, the median price of a family home will go from 400 to 450 up to 500 to 550. And that's, that's 100 to 150K value increase. Most people are not making 100 to 150K a year in their salary. The average salary here in the United States, I think, is around $55,000, $60,000. And then when you take into account expenses, you're lucky to save up $5,000 or $10,000 making that kind of money, especially if you have a family. If you have a family, you probably have credit debt, and credit debt is going to new all-time highs. So the purchasing power of the American consumer and consumers worldwide is, as we know, being drained from them through the design of the fiat system, through the ability of the governments to steal their purchasing power and spend it through printing. And Bitcoin finally comes in and says, you know what? We're not going to let this happen anymore. When you adopt Bitcoin as a savings technology and you use it, it's what Bitcoin does. Warren Buffett has a great quote. If you have to work to make money your whole life, you'll work until you'll die. You have to find a way to make your money work for you. Fantastic. I don't have to take my money and invest it to make it work for me. Bitcoin was engineered to work for me. It was strategically designed to leverage those natural laws of economics to work for me. In its design, it doesn't need to be deployed to work. It works through its design, and it's working better than anything else we've ever seen. I think the 10-year CAGR right now is 82%. I mean, even at People's Reserve, I have we run models and we try to figure out how to teach people and how, especially politicians with municipal Bitcoin bonds, how this can work. And we've been using the 50, 60% CAGR. And then we usually cut that in half to get to the 25, 30% CAGR that Michael sees in the long term. But the 10-year Bitcoin CAGR right now is 82%. So when you run the numbers on that, that's insane. That kind of growth is impossible in any other asset class in the world. So for those of you who are watching this show and you have that dream of owning your own home, you're not going to do it by saving in fiat currency units. It's fiat currency units lose value over time by design. Bitcoin gains value over time by design. That needs to be your savings vehicle. And when you make it your savings vehicle, you'll be able to accomplish your goals much faster. And when you have services like People's Reserve, when you finally get to that point, you actually won't need to sell the Bitcoin. You will just borrow against it. And now you're borrowing these inflating fiat currency units that lose purchasing power over time against your pristine collateral that gains value over time. And what happens is the burden of the debt shrinks. It shrinks over time to the extent at some point in time, you can eliminate that debt with the value increase in your Bitcoin. Now you own your home and your Bitcoin. You didn't have to give up your Bitcoin to buy the home. And these types of financial products are what's driving the monetization and financialization of Bitcoin, because the big players in the industry, they absolutely know what's coming, which is why we're in SPAC season right now. And they're getting prepared, because when these products go live, not only from us, but from all types of companies that are going to be offering these products and services, not exactly like ours, but similar. And be careful, choose your counterparty wisely, right? Make sure you understand liquidation risk. Make sure you understand what your options are in that contract. Make sure you understand your counterparty. Choose your counterparty wisely. And if you want to be with Bitcoin maxis who built for Bitcoin maxis, you'll want to be at People's Reserve. Now, if you don't care about that, then you can go with somebody else. If you want to make sure that your Bitcoin can't be liquidated based on Bitcoin's price volatility, well, then you'll want to be with People's Reserve. If you don't care about price volatility and you have a big stack and you're only borrowing a very small amount against it, well, then go to wherever you can get the best interest rate. But most likely, if you want the best interest rate, you're also going to be coming to People's Reserve. But if you pay attention to those 3 points, I think it's going to be really clear that the future of finance, of all finance, not just Bitcoin powered finance, all finance will incorporate Bitcoin into it. And if it doesn't, it will just be eliminated because the incentive will break.
I love that. And I completely missed that question, but like you already explained it a little bit. At BitBox Reserve, you are doing basically borrowing against your Bitcoin for retail people.
Yes. Yeah. So the biggest difference with us at People's Reserve, because I've been in the industry for a while and I've had sleepless nights. I mean, I've had loans out against Bitcoin and the price of Bitcoin is going down, 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 big down, down. And you're like, where's the bounce? You don't know. You're going to go to bed and you don't know if you're going to wake up and that Bitcoin's going to be there or not. Your Bitcoin could be liquidated. And then if you add more Bitcoin to margin and something weird happens, you could lose that Bitcoin too. So now it becomes like, well, do I just lose what I originally posted? Or do I put more Bitcoin and take the risk of losing even more Bitcoin than I originally posted? I mean, and you literally will lose sleep at night. I know I did. So when we created our products, we knew we have to eliminate this liquidation risk. And I think the real innovation in our products, which nobody else in the industry is doing, is that we just adjust your interest rate. So when the price of Bitcoin goes down, your interest rate could go up, but within limits, right? So some people have reached out to us and been like, hey, are you going to be charging 20% interest rates like a credit card? And I'm like, first of all, there's usury laws against that. So we can't do that anyway because of regulations. And second of all, that's value extraction. So, we anchor our rate to what today is the prime rate. So the prime rate today is 7.5. And depending on how much Bitcoin collateral you post, you could actually get prime minus interest rates. So if the value of Bitcoin goes down, you'll start moving above prime, but you're not going to be moving to double prime, which is where some of the Bitcoin lenders are today in the 12 to 16% range to borrow against your Bitcoin with liquidation risk for an over collateralized loan. It just doesn't make sense. You as Bitcoiners hold the most pristine form of collateral in the world. And there are not many lenders out there that look at Bitcoin as pristine collateral. And most importantly, I think this is important too. We have a relationship maxi mindset at People's Reserve. We believe that if we build relationships with people in the long term, we'll have a stronger, more sustainable business than a business that is just coming in and taking advantage of temporary arbitrage opportunities and interest rates, right? Because a big player will come in, they'll have a credit line or a warehouse, they'll be borrowing at 6 or 7%, and then they'll turn around, they'll flip that credit line to the borrower, and then that's where the 12 and 14 and 15% come because they want to make money too, so they have to arbitrage the difference between their borrow rate and the borrow rate at which they're lending to the borrower. So in order to make money, they have to charge those higher rates. But at People's Reserve, we've done our best to source LPs who understand that lending to the government is not risk-free, and that the risk-free borrower is actually the Bitcoiner. It's the over-collateralized Bitcoiner who presents the risk-free opportunity. And then additionally, and this is, to me, this is just another thing that institutions and liquidity providers are waking up to this. When you lend your money to the government, the principal of that stays in the cash equivalent, right? It stays in the debt note. And then that debt note is deflated over time. So there's an ongoing soft default for those people who hold Treasury debt, because they have to print the money to make good on the debt, which means there's going to be dilution, which means the real rate of interest is negative, which means the cash equivalent principal is being diluted over time. What we've been able to do at People's Reserve is source LPs who understand that just because the government has a printer, that doesn't make them the risk-free lender. Because if everything folds, like we're going through soft default now, what if we go through a hard default? No one ever really talks about this. I've only ever heard Peter Schiff, funny enough, talk about this. But Donald Trump was a great businessman. He declared bankruptcy a few times and restructured the assets in his portfolio a few times in order to make it out of that bankruptcy and end up where he is now. So it's a higher percentage chance that he does some type of restructuring with Bessent and Lutnick on existing debt than it is with any other president who really was never a businessman and just probably let other people deal with it. So he might play that card. Now, I don't think he will because the soft default strategy is working good. There's no need to hard default. The United States has a lot of natural, the asset side of our balance sheet, even though our debt side is 36 trillion plus another 220 something trillion of liabilities. In the long term, I think most people still believe the United States can cover that debt. I think that the asset to debt ratio, liquid assets are not enough to cover, but the intangible assets, the growth of the economy, the level of innovation, and thus potential for increased tax revenues, like it's greater here than it is anywhere else in the world. It can grow more here than it could anywhere else in the world. And that gives them a little bit of trust. That last little string of trust, in my previous shows, we talked about the only difference between inflation and hyperinflation is trust. Well, there's this little string of trust left, and it's based in the hope of patriots who believe in America and believe in the will of America and freedom and liberty to pursue free markets and to create value and deliver it to the economy. That is kind of like the last string that is saving the financial position of the United States. So if we can strengthen that position and string by including Bitcoin innovation, like the Strategic Bitcoin Reserve, in the future, a Bitcoin recapitalization fund where we can do more things with the Bitcoin with less handcuffs. Those are the types of things that are going to, I think, change everything. Because I think Nixon said at one time, or somebody said at one time, as the U.S. goes, so goes the world. So if we can embrace Bitcoin and we can adopt Bitcoin, we're going to see it across the spectrum. And that is going to really accelerate things where we go up the S-curve. And I think that's what everybody's waiting for. We are waiting to move up the S-curve. We're very clearly at the bottom of the S-curve, but through monetization and financialization, we are about to explode up the S-curve. And that's the move you don't want to miss. Now, if you do miss that move, you don't lose anything from Bitcoin, right? If you're the last person to get into Bitcoin, you're still going to benefit from Bitcoin because Bitcoin is a truth money. It's an honest money that can't be diluted. And at the top of the S-curve, we'll finally get that stability. At the top of the S-curve, Bitcoin will be a derivative of the global economy, not just of one country's stock market. So when we get there, things will be a lot easier to understand how the economy will function and work. But the opportunity to get extremely wealthy in Bitcoin, in my opinion, is coming up. And it comes with that repricing in this S-curve adoption. Once we make this move, Bitcoin will be repriced and it will become more volatile than it ever has before, not less volatile. The lower volatility comes up at the top of the S-curve. But while you're in the middle of making that move from the bottom to the top, volatility is going to increase. And so people need to be prepared in their mind to just say, if your wealth goes up and down by the value of your salary per day, like just be prepared for that. Get in the mindset, understand this is going to be volatile. Look at the price of gold through the Weimar inflation. When the mark inflated, the price of gold got more volatile, not less volatile. So I'm not saying that the dollar is going to hyperinflate. especially if we get a strategic Bitcoin reserve, I think it could actually strengthen the dollar, because if we put the Bitcoin on the asset side of our balance sheet, the asset side of our balance sheet will be able to outgrow the pace of growth of the asset side of our balance sheet will be greater than the pace of growth in the liability side, even with all the printing that we're doing. That's the type of value accrual that you can get by putting Bitcoin on your balance sheet. So corporations are figuring out, institutions are figuring out, small and medium-sized businesses are figuring out, governments are figuring it out, individuals are figuring it out. And if the majority of them figure it out before you, you're going to lose your opportunity to generate generational wealth through the S-curve adoption move. And I don't want to see anybody listening to this show or any of your family and friends miss out on that, because it only comes one time. You don't get this. This is kind of like a once in a civilization thing. We finally discovered money. Like, up until Bitcoin, we used seashells, we used gold, we used paper notes, we used derivative promises, we used all these different types of things to try to facilitate transactions between each other. And we never found anything that worked. But now with Bitcoin, we actually have the solution. We found money. We've invented money. And this truth money is only going to come around one time. And now's the time to embrace it and be empowered through its adoption on a global scale. And if you do that, I think, and this is what makes me most excited, people like you and me and the other Bitcoiners that we know, some of the best people in the world are Bitcoiners. They're the opposite of the central bankers, right? The central bankers are the ones who create the problem. The love of money is the root of all evil. A lot of Bitcoiners don't love money, but they just love being prudent. They love understanding that they have a savings technology and that it's empowering them, and they're not being stolen from through the current system. They've detached from the matrix, but then that leads to them respecting life and respecting others. And I think we move to a bright orange future where Bitcoiners have the most purchasing power, because the things that go on in the world when Bitcoiners are funding them are going to be much better things than what's going on in the world right now.
I love that so much. That's really, really a great explanation of that. And I wanna touch on one thing. You with the people reserves, but I think strategy probably started that whole thing with like playing the fiat game to get more Bitcoin and making the black hole up. I think that this actually accelerates the move towards a Bitcoin standard and actually probably makes that move and the adoption of Bitcoin even faster, because when all the Bitcoiners are opening up that fiat games that can suck in more financial energy to get more Bitcoin and suck more and more in there, and there's like bonds and there is all different kinds of fiat derivatives from that. That kind of opens up a black hole of Bitcoin that can make that S-curve adoption moment, that suddenly moment, even more abrupt, even faster than we would have otherwise had. Because if number go up, people come in Bitcoin and they realize, I have to listen to those Bitcoin guys all of a sudden. And then they also start doing that. I think we are kind of opening up a black hole for Bitcoin adoption.
Oh yeah. I mean, I'm a big fan of Michael Saylor. My split adjusted price is $27. I've been with him on this ride for quite some time. There's no doubt in my mind, he opened the Pandora's box of financial engineering. And even what we do here at People's Reserve is building on top of his shoulders. So he is the original innovator. He is the original person to bring this forward. He's at the tip of the spear for financial institutions and corporations. And at People's Reserve, we're building on top of his shoulders and learning from his innovation and continuing that innovation and bringing financial engineering to retail. And that's what's so exciting about People's Reserve. I mean, in the long run, and I think this is probably a great time to share this, but for those of you who don't know, it's SPAC season here in the United States of America. So SPAC is a special purpose acquisition company. This is a company that is publicly traded, whose sole purpose is to acquire or be acquired. And we recently saw David Bailey with Nakamoto do a reverse merger into a SPAC and now have a publicly traded Bitcoin Treasury company. People's Reserve is pursuing this same goal. People's Reserve is looking to perform a reverse merger so that it can get access to U.S. capital markets And we have some really cool ideas that build on top of Michael Saylor's flywheel to where we can access these capital markets not only to acquire Bitcoin and put Bitcoin on the balance sheet, but just as important, to empower Bitcoiners. Because I think that's probably where there's one little gap of understanding, is that when you're in MicroStrategy, and remember, I'm a long-term shareholder, split adjusted price at $27, it's the Bitcoin accumulation game right now. And the long-term theory in my mind is eventually MicroStrategy will be somewhat of a central bank of the internet economy, right? And the internet economy, for those of you who haven't listened to our previous episodes, the internet economy is an amazing domain. It is the only economy in the world with no debt. It is the only economy in the world that no one country can control or outcompete. And I think most importantly, it's the only economy in the world with free market interest rates. So you definitely want to be in a position where you are one of those, for lack of a better term, central banks of the internet economy. And these Bitcoin Treasury companies, they are the future central banks of the internet economy. And People's Reserve wants to play a role in that marketplace, because we believe, if people are familiar with the yield curve, the very, very front end of the yield curve is the federal funds rate. And the federal funds rate is an overnight interbank lending rate. Well, in the internet economy, there is no technical bank, but in my opinion, these Bitcoin Treasury companies, they will be the future banks. And those Bitcoin Treasury company lending rates will actually be the overnight rate. So the rate between a People's Reserve and Strategy, or a Strategy and a Metaplanet, and a Metaplanet and a 21. These interbank lending rates are actually going to formulate and create what would be equivalent to the TradFi's federal funds rate. And we'll have an overnight rate between BTCs. It's funny that it's Bitcoin Treasury Company, BTCs. It's BTC to BTC's interbank rate that will create the very front end of the yield curve. And what I'm so excited about is that I believe People's Reserve products are going to form the other parts of the yield curve. Because right now there's nowhere to look. Besides these interbank lending rates that don't exist yet, we have funding rates. But funding rates are based on leverage and derivative products, and also the balance of bulls and bears within the marketplace. So funding rates are kind of their own little thing, and they're every 8 hours. So I think it's hard to plug that into the yield curve. But when you start getting 5-year bonds and 7-year mortgages and 15-year mortgages and 30-year mortgages, people are going to wake up in the morning. They're going to check the price of Bitcoin. They're going to check the price of gold. They're going to look at the US 10-year Treasury interest rate. And then they're going to move on to the free market internet economy. And they're going to check the interbank Bitcoin Treasury Company to Bitcoin Treasury Company rate. They're going to check the 5, 7, 15, and 30-year Bitcoin powered mortgage rate. Because now the financial revolution is not just about free market money. It's about free market interest rates, which means free market yield curve. And the internet economy will be the only domain in the world for an unanchored free market yield curve. So sure, in the traditional market, you have bond vigilantes, you can sell it off, but there's anchor rates, and those anchor rates help defend the yield curve, and yield curve control operations help defend the yield curve. There's nobody to play defense. There's no anchor rate to slow the process down in the internet economy. It is a true free market yield curve. And this revolution, this financial revolution that empowers people, is based off of finance. It's not just money, it's finance too. Because businesses need to be able to borrow against their cash flows. People need to be able to borrow against their Bitcoin. And if they can't, then we're not going to get the velocity that we need within the economy. But we will get that velocity when we have these financial products. And these financial products will empower you rather than extract value from you. And when we flip that paradigm, I think we're going to see economic growth that we never thought conceivable. Because in the fiat system is literally designed to yield farm or harvest that energy, like the matrix. The system is literally taking all of the value that you give, and through taxes and through deficit spending, sucking that value out of you. But in a Bitcoin standard, in a true free market economy with a hard money layer 0, all of the value that you deliver will be yours. So when you have that value, you'll be able to spend it back into the economy. You're not giving up your right to spend into the economy and assigning it to the government. You yourself will spend it into the economy. And I think everybody would agree that The best capital allocators are the ones who deliver value to the economy, not the ones who suck and extract value from the economy, which is why we see so much waste in the government. They don't deliver value, they extract it. But Bitcoiners who deliver value, when they start spending their purchasing power into the economy, the whole world will change, and it will change for the better. Quality will go up, not just of life and standard of living, but quality of goods and services. Customer service will go. I know here in the United States, I went out to dinner with my family the other night, and it was like 7 of us, and it was like $700 and something for dinner before the tip. And I'm like, how do people do this? Like, how is this affordable? And in a Bitcoin standard, those prices just keep going down and down and down. Family dinners become more and more affordable. Being able to be a blessing to somebody in need becomes more and more affordable. So all of these things, people don't really think money and finance fit into philanthropy, but they really do. Money and finance fit into philanthropy, and the future that Michael Saylor and MicroStrategy and People's Reserve and Metaplanet and these Bitcoin treasury companies are seeking to build is a better, stronger, more secure future, not just immediately for ourselves, but most importantly, for our children.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have 2 ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in the jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary, and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. That's such a true message. Like Bitcoin really changes something, and I always describe it as a Bitcoin as a fork in the road of human civilization, because there are certain innovations like the printing press, like electricity, like the electronical telegraph that just change the outlook for human civilization so fundamentally that it's a fork in the road. So like it's like the other way is no longer going. It's a whole new era of how we do things, and there's like 50 topics that I want to go to. I just want to note this for the people, because you have been on 2 times before, and I think we laid the groundwork, do a lot of it in the previous episodes. So like this, the first one up here is the first one, and then this is the second one. I see that we went from 1 hour conversation to 1.5 hours. Maybe we go like today with 2 hours. Let's see how long we do. So like for people that are wondering how those episodes are called, because sometimes they are like harder to find with like almost 500 episodes now. But it's super, super, super important that we not only talk about the money aspect in Bitcoin, but there is a real shift in society happening because of Bitcoin, and this actually brings good things to society. Other than we have now a money that works. If that makes sense.
Yeah, and it makes perfect sense. And what's exciting is that it starts with money and finance. So it's weird that the Bible says that the love of money is the root of all evil. Isn't that interesting? Like just the concept of somebody being addicted to money and the ability to manipulate reality with their money actually is the root of evil. So when you detach that, and that doesn't mean people aren't going to love money. Like Bitcoin is not going to fix people, right? Like sin is a spiritual human problem, not a money problem. So you're still going to have people that love Bitcoin and try to use Bitcoin and its purchasing power to manipulate reality around them and forcing their own will into their life rather than yielding that will to the Lord. So you're not going to get rid of that. But it is amazing that I think the vast majority of Bitcoiners, I mean, of all the Bitcoiners I've met, very few of them come off loving money. They love Bitcoin so much because they actually hate money. They hate fiat currency. They hate central banking. They hate manipulation of interest rates. They hate extracting value from the poorest people of society. They hate that the wealth gap between the 1% and the normal person is growing. They hate that so much that it drives them to love Bitcoin because it solves that problem. So I think, the vast majority of problems we see today are sourced in the actual fiat system itself. And that translates to a better world. But what makes me so excited is that Bitcoin can be integrated. We don't need to start over. And I think a lot of people misunderstand that. Like when I talk to people, a lot of people think it's like a 0 or a 1, right? It's like it's fiat currency or it's Bitcoin. And if we switch to Bitcoin, well, it's going to be the apocalypse. All the systems are going to break down. The banks are going to break down. Everything's going to break. Businesses will break down. The stock market's going to crash. And we have to start over from 0 with Bitcoin. I don't think that's what's happening. And I don't think there's a way to draw that logical conclusion. I think that definitely could have happened if the people stood up and said, we don't trust this system and we're done with it, then that absolutely could happen. And it could still happen if things change. But right now, in my opinion, it seems that we're on track to integrate Bitcoin into the fiat system and then slowly over time, just get rid of those wicked practices that have led to the gap in wealth and the continued value extraction that we see, which means that we can have a peaceful transition. And that's really important. I mean, I don't want anything but peace. Bitcoin is orange peace. That's why I do that. My little emojis, my orange peace love. I do that all the time because Bitcoin is the peaceful revolution. It is the passive, peaceful way to protest against the system that has been designed and leveraged against you. And now people are waking up to that and businesses are waking up to that. We can actually transition into that. And, people's reserve, a lot of people get excited about our mortgage product because they want to buy a home and they've been responsible savers of Bitcoin and they want to buy their home without selling their Bitcoin. So it's a no-brainer. That was my big problem. I'd be a lot wealthier today if I didn't spend 100 Bitcoin on my home. So, you never want to sell your Bitcoin for real estate, but you want to access that trapped equity and be able to spend it into reality. And you do that by borrowing dollars against it. So that's a really important concept. But what people are missing here is how fast adoption is going to go with products like Bitcoin's, like People's Reserve Bitcoin bond. We've developed a principal protected note that allows a business, small and medium-sized business. So for business owners listening to this show, especially if you're a Bitcoiner, the number one thing in your mind is, how do I accumulate more Bitcoin? I want Bitcoin on my balance sheet. But at the same time, your business is growing. You need to hire more employees. You need to buy more equipment. You need to increase supply so that you can feed demand. So there's not much room on that balance sheet for taking that profit and turning it into Bitcoin and then holding that Bitcoin on your balance sheet as trapped equity, because that's equity that you could have rolled into the expansion of your business. So for small and medium-sized business owners, I think the People's Reserve Bitcoin bond is going to accelerate adoption at a rate and pace that has not been considered thus far. And the reason is because if you're a business owner and you have and let's say for the quarter you have $1 million of profit, most business owners are going to take a large chunk of that and reinvest it in the business. So let's say you take half of that. You take 500,000, you reinvest it in your business. Maybe you onboard a new employee, or you buy rights to service a new zip code, or whatever it is, and you expand your business. The other 500,000 you want to put into your savings. Well, companies are smart enough to know, I can't really save in the treasuries, but the kicker here is that if you take that 500,000, you buy a treasury, you can use that cash flow without giving up principal, right? You can use that cash flow to help finance your business costs. So your savings is producing something for you. If you put it in Bitcoin, yeah, the value can go up, but you really don't want to spend it, right? You can't spend it. It's trapped equity on your balance sheet. The People's Reserve Bitcoin bond is designed to unlock that equity. So if you take that $500,000 and you buy the principal protected note, one thing is you know for sure, after 5 years, even if Bitcoin goes to zero, after 5 years, the allocation in that note that's in treasuries, the maturation value plus the interest paid over that 5-year note time will equal your principal investment, which was the 500,000. So if you're a business and you're a little bit nervous because you're a business owner and you're not a Bitcoiner, but you want to get exposure to Bitcoin on your balance sheet, this is a solution for you. If you're a business that's growing and needs to reallocate in a way that you don't trap equity on your balance sheet, this is a solution for you. And I think this is going to accelerate adoption on the small and medium size. We already see adoption accelerating on the corporate side, right? I mean, we have publicly traded companies that are coming into existence simply to acquire Bitcoin. That's the only thing they do is buy Bitcoin. So the institutional side of this is already going full steam, but the small and medium sized businesses are struggling because of those problems. And those are the problems that we focus on. So when I say financial engineering for retail, when it comes to the business side of this, yes, we have institutional and corporate products, but we also have small and medium-sized business products to help them accelerate adoption, to help them create demand on Bitcoin, but more importantly, to be empowered by their responsible saving in Bitcoin. Because when you have a principal protected note, you can post that note at People's Reserve as collateral, and we will treat it as pristine collateral. So now if you need to tap into that $500,000 for whatever reason, you don't have to sell the Bitcoin so that you can hire this employee that you gave this guy the offer. You never thought you were going to get him. He agreed. Now he's coming to work with you, but you need to pay him. So you need to liquidate your Bitcoin. No, you take the principal protected note. You take the Bitcoin bond. You post it as collateral. You borrow against it to pay that guy. And then over time, you use the cash flows from the business to pay off that debt. At the end, you have all of your Bitcoin, the guy working for you, and you get the best of both worlds. So these types of solutions at the small and medium-sized business level, I think, are just as important as the solutions that we see coming from the Bitcoin treasury companies for the institution and corporate level. And the small guy adds up. I like to compare it like this. The tax brackets in the United States. If you took all of the wealth of the top 0.1% of the people, those tax brackets, it wouldn't even make a dent in the debt. Like like the Elon Musk is worth like $500 billion, right? So you take Elon Musk and the top 50 below him, you're barely going to make a dent in $36 trillion. So the amount of taxes they're paying is small relative to the aggregate amount of the middle class people. So the majority of people who are paying in the tax bracket in the middle class, they're the ones who are creating the majority here in the United States of the $5 to $6 trillion of tax revenue. The top 1% are not contributing that much because they have tax shelters, because of many different reasons. But even if you just took all of their wealth and you taxed them at 100%, it still wouldn't make a dent. It's the vast majority of the middle class people that produce those tax revenues. Likely, it is the vast majority of small and medium-sized businesses that represent much more purchasing power than a Bitcoin treasury company. So Seyr has done a great job raising billions of dollars from the marketplace to buy Bitcoin. But when you add together all the small and medium-sized businesses, they're going to produce trillions of dollars of purchasing power demand, not billions of dollars. So it should not be a class of business that is ignored or looked over. Yes, we want to do it at the corporate and institutional level, but also at the small and medium-sized business level. When you add up the purchasing power of all those small and medium-sized businesses, it's significant. So giving them the proper tools that they need to get Bitcoin on their balance sheet and get exposure to Bitcoin in a way that doesn't trap equity, but that empowers them, that is going to lead to massive acceleration of small and medium-sized businesses getting involved in Bitcoin accumulation.
It's a really good point. And on top of that, I guess strategy gets. I'm actually curious what you think about that, because they're getting more and more competition in a sense. I mean, Seyr himself wants competition. He wants to more companies buying Bitcoin and doing all the same things. But how do you look at 21 Capital from Jack Mallers and other companies are kind of doing it? And I think he even went ahead and said he wants to, or he thinks that he can accumulate more Bitcoin than strategy has and surpass that, which is kind of crazy, going above the 500,000 of Bitcoin that strategy already has.
Yeah, and that's a great question because I love Seyr and I like Mallers, and I think they're two top people in the industry, and I hope to be swimming in that circle pretty soon with People's Reserve, because we have the same vision. We want to perform a reverse merger. We want to get access to U.S. capital markets, and we want to start accumulating Bitcoin. I think the difference of People's Reserve and Strategy and 21, besides them already completing that process and having access to U.S. capital markets, which is a big difference, by the way. So we're very excited to accelerate that and get where we need to be so we can start playing the game. It's one thing to be playing the game and wanting to play the game. So we've got to get to the point where we're actually playing the game. But when we get there, what differentiates us is that we actually will have an ecosystem through our products and services that produces revenues. And then those revenues are going to pass through and eventually be paid as dividends. So not all Bitcoin treasury companies are in a position where they can actually pay investors dividends. And I think that's really important, because although the Bitcoin per share is going up, like, I'm very happy with the performance of my MicroStrategy stock, and I'm ecstatic that the Bitcoin per share and that Bitcoin yield metric is just performing at a rate that is unbelievable. However, I can't turn my MicroStrategy stock in for that Bitcoin. So, until there comes a day where I can turn my shares into my broker and get Bitcoin sent into my cold wallet, I think the thesis is that this is a long-term investment into one of the future central banks of the internet economy, which is why I'll never sell my shares because I believe he's going to succeed at that. I mean, he's doing a heck of a job, and it's going to be hard to and be very hard for anybody to catch him. However, I do think the next evolution of Bitcoin treasury companies is fast approaching, and those Bitcoin treasury companies aren't going to be only accumulation engines. They will be accumulation engines as well as profit engines. And from the investor's side, it's very exciting to think about the long-term potential of any Bitcoin treasury company, but also it's very effective to be able to receive a dividend from that company, to be able to receive some sort of cash flow from your investment. So while you're waiting for that company to turn into the central bank of the internet economy, you're also getting some type of benefit that isn't just based on share price and long-term vision. It's actually based on dividend distribution and having a way to increase your quality of life and standard of living today. And I think there's a place for both of those. There's going to be obviously continued interest in the original innovator and on top of the shoulders of which everybody in this industry is building on top of, which is Michael Saylor. And I'm not going to ever sell my shares. And then there's going to be other companies that come and mimic that strategy, which is what we're seeing now. But I do believe the next evolution of Bitcoin treasury companies is going to have, I mean, People's Reserve may be the first, we may not be, but if we can accelerate this timeline, we will be the first, where we actually have cash flow through our financial engineering operations for retail. So we can raise capital through our financial engineering for corporations and for institutions. But then the way we deploy that capital doesn't just create Bitcoin yield, it also empowers the ecosystem, which allows us to onboard more customers, which creates more revenues, which then pass through as dividends. And that is going to be like the perfect sweet spot where you have the long-term Bitcoin treasury company, central bank of the internet economy vision, but then you also have the cash flow to produce a dividend to make your shareholders feel some type of benefit in the now instead of having to put all the benefit in the later. Because we already have that with our Bitcoin, right? We buy Bitcoin not so that we can spend it today or tomorrow, but that so that we can have it in the long-term future. So people who have been saving Bitcoin responsibly for a very long time, we don't ever want to sell we want to hand off our Bitcoin. We want to put our Bitcoin into a trust and then make sure that trust takes care of our family for generations and generations to come. That's a Bitcoiner's mindset. But at the same time, do I need to have a dual strategy on this? Do I need to have a leveraged strategy on the long term with shares and Bitcoin? Can't Bitcoin just do that? And then with my shares, I can leverage those to create a little bit of cash flow with the long term. Because it's interesting, like the dynamics, I'm sure we're going to see a bunch of financial engineering from all the Bitcoin treasury companies, and they're going to do exactly what Michael did. They're going to copy what he did because what he's done is genius. And you're going to see convertibles, you're going to see preferreds, you're going to see a whole bunch of different options to facilitate solutions that are solving problems faced by different pools of liquidity in the marketplace. And that's what Michael is doing, and other treasury companies will do that. But at some point in time, there needs to be a way to get exposure to a Bitcoin treasury company that wants to be a central bank of the internet economy, but also has the means to pay a dividend so that you can increase your quality of life and standard of living today with the distribution of that dividend, and then bank on the future of tomorrow with your Bitcoin savings. And that's what I'm so excited about People's Reserve, because that's what differentiates us. Our mindset is not full on Bitcoin accumulation. Absolutely. It's aggressive Bitcoin accumulation, but at the same time, it's also aggressive dividend distribution so that our shareholders can feel the benefit today and win in the long term with our vision and their Bitcoin savings, it kind of marrying both visions of the traditional market and a traditional Bitcoin hodler together in a way that delivers long-term value and value today.
That's really, really, I love that future. I love where this is going, and I'm really looking forward. I'm also really looking forward to looking back at People Reserves and what you're doing now, and seeing in 10 years, looking back at this podcast and see how this develops. I'm already looking forward at this episode and seeing how it developed.
Yeah, that'll probably be our 10th episode, right?
Well, 20th, let's say.
20th episode, yeah.
Let's see. I want to touch on one more thing before we come to the end routine. You mentioned a peaceful transition, and I was always on the fence of like, oh, do we have a peaceful or non-peaceful transition? And since kind of 2024 and 2025, I changed my mind completely, and I'm pretty sure we have a peaceful transition out of two reasons. Because the biggest world power with the USA is now full on acceptable with Bitcoin. Before 2024, I was never really sure, like, oh, they haven't even an ETF. Maybe they declare war on Bitcoin. Like it was not impossible that happens. But now with the ETF, and especially now with Trump saying strategic Bitcoin reserve, with so many Bitcoin friendly policies, it's for me completely out of the question that we do not have a peaceful transition. We will have a peaceful transition if nothing changes. If the USA all of a sudden says, oh, like we hate Bitcoin, and we that if that happens, even though I don't put anything on that, yeah, maybe we have a not as peaceful transition. But I'm really curious what you think on the strategic Bitcoin reserve and what the implications of that is, and what you're kind of seeing from nation states stacking Bitcoin, not individuals. We're not talking individuals buying homes. We talk about big companies, but the real end boss that have a lot of money, endless money, basically, is basically printing money to buy Bitcoin. The USA with the Fed.
Yeah, absolutely. So when we talk about sovereign Bitcoin accumulation, this is the biggest warning bell that there is. And we see countries there's multiple ways to accumulate Bitcoin. You can accumulate Bitcoin through taxes. You can accumulate Bitcoin through mining. You can accumulate Bitcoin through buying it in the spot market. So those are the three main ways that governments can acquire Bitcoin. So here in the United States, I think it's really important that we get Trump's executive order actually codified into legislation so that it becomes law. And by law, we have a strategic Bitcoin reserve. And, some of the handcuffs that come with the strategic Bitcoin reserve include once you buy it, you can't touch it for, I think, 10 or 20 years. And then when you do sell it, the proceeds from that sale have to pay down the national debt. So, these are good handcuffs that we need because we're not China. And every 4 years, we're going to see an administration change, and then every 2 years, we're going to see the lower levels of Congress and stuff change. So we have a lot of change within our system. So it makes perfect sense to put these handcuffs in there because you don't want there to be a change that disagrees with you and then ruins all of that hard work. So the strategic Bitcoin reserve is of the utmost importance. But I've been saying this for a while. And I thought a while back I was nominated to sit on RFK's Council of Economic Advisors, and I finished 8 out of like hundreds of people, and I never heard from them, which was really disappointing because I don't know, they contacted me and said you've been nominated, and then I told some people to vote, and we voted. We did really well. I never heard back from them at all. But if I did, one thing that I would be pushing for today is the Bitcoin Recapitalization Fund, because we don't just need a strategic Bitcoin reserve. The strategic Bitcoin reserve is really important because that is your long-term hodl. That is the coins that we are accumulating for future generations. Those are the coins that we are accumulating so that the asset side of our balance sheet, the growth of that side of our balance sheet can outpace the growth of liabilities. So you could imagine if you work a regular job and you go from making $60,000 to $600,000 a year, then you're going to have a much stronger credit score, right? Because now you have a lot more income. So your credit score is going to go up. Your debt to income ratios are going to go down. You're going to be in a stronger financial position. And we've seen this with El Salvador. El Salvador added Bitcoin to their balance sheet. They had some of the best TradFi performing bonds in the world. And banks that don't like them had to increase their credit ratings because they were getting into a stronger credit position thanks to their accumulation of Bitcoin. So the strategic Bitcoin reserve is super important, and I like the way the law is written. However, this is about innovation. This is about the United States maintaining its financial leadership throughout the world. There is the internet economy domain. No one country can control it or outcompete it. Therefore, someone must step up in an attempt to lead it. And if you're going to lead the internet economy, you must lead in innovation. You cannot pull a China and ban mining. You cannot pull another, I don't even know, in a good example, you cannot pull a country that is going to turn off innovation and not be open to integrating Bitcoin. And that's why I love your point. The United States opening up its doors and choosing which path it was going to go at this fork in the road. Thank God they chose the fork where we chose innovation. We chose acceptance. We chose adoption. We're trying to figure this out, right? But as we're trying to figure this out and we're trying to get the strategic Bitcoin reserve codified into law, there needs to be a secondary push. And that secondary push is for the Bitcoin Recapitalization Fund. And what we can do, like one of the ideas that I had before was the United States of America is charging tariffs right now, right? Donald Trump is charging tariffs. Well, Trump should just say, okay, if you're going to pay your tariffs in dollars, here's the tariff rate. However, if you're going to pay tariffs in Bitcoin, we'll give you a discount to that tariff rate and you'll pay this lower tariff rate because you're making payment in Bitcoin. And then we can accumulate all of the tariff payments that are made in Bitcoin into the Bitcoin Recapitalization Fund. And the goal of the Bitcoin Recapitalization Fund is to recapitalize the republic. If you look in the United States and you look at our infrastructure, and then you travel to other first world countries and you look at their infrastructure. I just saw in China, they have a magnetic train that goes 620 miles per hour. That's faster than a commercial airliner. So in China, they're using magnetic trains and traveling faster than we here are in the United States using jetliners. Where is our infrastructure? Where is our train infrastructure? Where is our city infrastructure? Why are we lagging behind as a global leader? Why is our infrastructure lagging behind other competitive countries, other countries that are competing to be at the top of the world? Why? How? How is that? We spent $36 trillion. We promised to pay another $220 trillion. Where the hell did the money go? And I think what Elon Musk is doing with Doge is starting to get the answer to some of those questions. And unfortunately, the lawyers came to the conclusion that, well, hey, if the government sends people money and they spend that money, that's not fraud. It's just waste. It's the government's money for sending it out in the first place. So we're not going to see those arrests. We're not going to see people get in trouble like we wanted to. We're going to see the waste come to an end, which I think is of the utmost importance. But we have to figure out ways to innovate. So if we can cut waste and limit the growth of liabilities, accelerate growth of assets through the strategic Bitcoin reserve, but then innovate through the Bitcoin Recapitalization Fund, issuing Bitcoin bonds, issuing municipal Bitcoin bonds, so that we can make sure that the liquidity that comes into these products is redistributed directly into the smaller towns that are more easily held accountable. You know, a lot of people who support Trump see him fighting against the system. And I personally believe that's accurate, but some people don't believe that. Well, it's much easier to not fight the system if you're doing it at the municipal level, because the municipal level politicians are going to be held accountable. It's easier to fight your local politicians. I shouldn't say the word fight. You don't need to. It's easier to negotiate and work with your local politicians than it is to fight the system, than it is to work with the system, right? Because as soon as you start to work with the system, you need lobbying dollars and you need millions of dollars. But when you're working with your local municipality, it's a negotiation. You're talking to your neighbor. You're not talking to a stateside rep or a federal rep. You're talking to your neighbor. And I think that is how we recapitalize the republic. We take some of the liquidity flowing into the federal system and redirect it into the states, and kind of let Thomas Jefferson's original vision of states solving these local problems, where they're more local to the problem and can come up with better solutions, to come up and go ahead and do those solutions. But how do we finance it? Through municipal Bitcoin bonds, through the strategic Bitcoin recapitalization fund that is specifically used, just like the SBR comes with the handcuffs, the strategic recapitalization fund, it comes with a rule to innovate. Like, you're not just going to accumulate Bitcoin. You're going to find ways to use Bitcoin to empower we the people. You're going to find ways to deploy this Bitcoin capital to attract liquidity to the United States, attract investment to the United States, to build out infrastructure, to create manufacturing jobs, to do all the things that we wouldn't be able to do with a fiat system. Leverage the internet economy, leverage engineered money to empower your constituents, to empower we the people, to increase quality of life and standard of living through municipal Bitcoin bonds and through other options we would have through that recapitalization fund. So I think, yeah, you're right. The United States embracing Bitcoin is a huge first step, but we also must embrace the internet economy and then be motivated enough to step up and take a leadership role, which is going to require innovation. And I can tell you right now, if we don't do it, other countries will. And we definitely want to be the first country to step up and take the lead and set the precedent. And the clock is ticking, because as we accelerate up this S-curve of adoption we talked about earlier, other countries are going to step up because of the rate and pace of their own adoption. We see the Kingdom of Bhutan is mining Bitcoin. They took their mining profits and now they built a big international airport. So this is a big use case study of how you could acquire Bitcoin and then promote infrastructure building. And then that infrastructure, that airport, people are going to come in and out of that airport. It's going to generate revenues and tax revenues. It's going to bring in visitors. It's going to bring more people into the country, into the local economy. That's what this is all about. Because even Bitcoin at the top of the S curve, Bitcoin's value is tethered to economic value. So if the economy is shrinking, the value of Bitcoin will shrink. If the economy is expanding, the value of Bitcoin will expand. So the long-term function of Bitcoin is to be a measurement or metric on the true performance of the economy. And in order to get the best possible performance out of the economy, we must be willing to innovate and reinvest into the economy. So just like a small and medium-sized business must properly manage revenues and reinvest in the business to grow it, a country must reinvest its revenues to grow infrastructure, to increase quality of life and standard of living, to incentivize Bitcoiners who create value to come live in your state or in your country. That's where this is all going. And it starts with the strategic Bitcoin reserve. It accelerates with the recapitalization fund, and it ends up with us being a innovative leader in the internet economy, guaranteeing that we play a role in the future of finance and leverage those financial products to empower our own people.
I'm calling it now. We have now the last Trump term, and then we have probably 2 terms of JD Vance, and then 2036 JDK for president, I would say.
Yeah, I mean, yeah, I hope you're right, and I think we're gonna get it here. Trump really did a good job of allowing that short-term pain to take place in the very beginning of his term. So now that we've seen this big bounce, and I think we're going to see a big acceleration in the coming weeks, and that's not to say there's going to be real value growth, right? We're going to see nominal value growth. So if you're sitting in the S&P, nominally you're going to get richer, but in real terms you're still going to get poorer. So you still need to find the solution to outpace the growth of the currency supply with Bitcoin. But yeah, the way that he set this up, we've been through, I mean, the traditional markets went down almost down to the 200-day moving average. So that, the last time we were there was when they started raising interest rates. And the last time we were there was COVID. So it takes big shifts in market dynamics and market narratives to get prices down to that 200-day moving average. We already have been down to that level, and we are now back up, almost making new all-time highs. So I think we've had that big sell-off event in the early part of Trump's term. He's going to accelerate and push as hard as he can to create nominal growth through the remainder of his term. That's going to usher in, as you said, the JD Vance era. And who knows when we get there, but he could probably get a double term and do 8 years. And if we have these remaining years plus those 8 years, and the war on crypto doesn't come back from the people who are in control of the other side, unfortunately, it's becoming more and more bipartisan, thankfully. I've talked to people like Dennis Porter at Satoshi Action Fund. Bitcoin unites us more than it separates us. So thankfully, we're becoming more united around Bitcoin and what it stands for and how it benefits all constituents, regardless of their stance being conservative or liberal. Doesn't really matter. It unites everybody. So we need to embrace that uniting function and take advantage of the next 11 years to make sure that we innovate and that we, as aggressively as we possibly can, step up and to the best of our ability, take the lead in the internet economy. And I also think that comes with Bitcoin education. So, the government wants to tell you everything. Why can't they teach you a little bit about Bitcoin too?
Absolutely. And after JD Vance, as I said, CJ Konstantinos. I would love to see that. Really cool. Then by the way, is it something you even would like to do?
Oh, no, absolutely not. Absolutely not. Building people's reserve has been one of the toughest things I've ever done in my life. And I feel called to it. And if I wasn't called to it, I would have left a long time ago. The amount of time and energy that goes into everything that we've done over the last 4 years is very taxing and very draining. But if you feel called to it, that taxing and draining is actually rewarding. So I feel very well rewarded for the time and energy I've put into People's Reserve, because I know the value that we're going to deliver to people. And I know that our ethos, that Bitcoin maxi mindset, where it's about orange peace love, where we deliver value to you instead of extract value from you, we are going to set the bar. We are going to set the standard of what a business relationship should look like in a Bitcoin standard world, where where you're not a profit maximalist, you're a relationship maximalist. And as we transition into the Bitcoin standard, the companies who have that mindset are going to be around for a really long time. And the companies who are still holding on to that value extraction model that came with the fiat system, I mean, they're still going to be there because some of them have acquired large sums of money and even are going to be able to acquire large sums of Bitcoin, but they're not going to perform as well because consumers themselves are going to start waking up to how they should be treated by a company and to the fact that they're getting value extracted from them instead of delivered to them. So the fact that we get to flip the script and kind of lead the way in the orange peace love narrative, that has been super rewarding for me. But to move on and do what Trump does right now, there is no amount of money, there is no essay or grouping of words that could convince me to give up more time and energy from my family. So I look forward to launching People's Reserve and continuing to put in large amounts of time and energy into the growth of the company and into the global adoption of Bitcoin and into the pushing Bitcoin education to all corners of the earth. And I feel called to do that. But anything besides that, I really feel like my heart wouldn't be in it. And therefore I wouldn't be able to deliver as much value as I could deliver here at People's Reserve.
Great answer. I love that. We have two end routines. One end routine is always the same question. And the question is for you, what have you learned since your last appearance on this podcast outside of Bitcoin?
Oh, that's a good one. That's a really good one because Bitcoin's pretty much all I do. There is no outside of Bitcoin for me. I learned that teenage daughters like to talk back, and they're always right. I've learned that 4 and 5 and 6 year old brothers like to wrestle with each other. Outside of Bitcoin, I don't know. But I guess if I had to answer the question, I would say it this way. I think what's going on right now with the op return argument is what I've learned is that Bitcoin isn't just code, it's community, right? And that's why it's so important to make sure that you're running a node and that you can signal to the miners and to the marketplace where you stand. Because people ask, like, are they going to vote on it? Like, it's an ongoing consensus mechanism. So you have to signal into that consensus how you feel in order for the market to understand your place and your opinion. So this argument right now we have with removing the data limits on op returns. I mean, a lot of people have been DMing me and say, why haven't you spoken about this? But I think this question kind of tees me up perfectly because what I've learned is it's not just about money and it's not just about finance. It's about community and it's about people and it is about consensus and working together. So Bitcoin is not just a savings technology. It's also a voting system. It's also a consensus mechanism that allows humans to come together and signal their beliefs without having as much argument and fighting, right? So we have to run, if you're in Bitcoin, you should run a node. The amount of nodes there are relative to Bitcoin users is not good enough. So we need to push nodes and people need to understand how to run a node. And most importantly, the cost of spinning up a node and the technical requirements of that node itself need to remain limited. So any type of change to Bitcoin that could add to UTXO bloat by allowing additional data to be kept on chain must be scrutinized. We need to understand that Bitcoin is a monetary technology. Now, Satoshi himself put a text message in the first block, right? The chancellor on the brink of bailouts. So we know it can be used for that reason, for data storage, but it's a monetary network. And I want to say this because they try to pull economics into this. Yeah, but if they're going to pay to store their data, they should be allowed to do it. That's only true when Bitcoin is at the top of the S curve. So my position would be if you want to take away op return data limits, do it when Bitcoin's at the top of the S curve. Because at the top of the S curve, you have taken away all bad actor incentive. You cannot just say that, oh, if it costs money to store data here, then bad people aren't going to store data here. And it's not our job to fill out, to police those bad people. It's a tough argument because that's partly true. When those bad actors put in that data and bloat UTXO, they have to pay for it. So that's not economically sustainable, right? Because if it's not like a timestamp, like you use like a timestamp business model where you're using Bitcoin to track and timestamp things and you have to pay to store that data, and then someone's willing to pay you more than the cost to store the data, right? So it's like, oh, I want to timestamp this. Oh, well, it costs $100 to store that data. No problem. I'll pay you $200. I want this data on the blockchain. It becomes economical. It becomes sustainable. And the argument is that data storage is not going to be economical. It's not going to be sustainable. But I think that argument is only correct when you're at the top of the S curve. Because right now, we still have cantillionaires. And the cantillionaires have the power of the printer. So they can bloat the UTXO and require nodes to have larger technical specifications to store this data, thus harming decentralization and making it more centralized by blocking more people out of running a node in a cheap and easy way. And they have the incentive to do it. So when they spend that money to store the data, like if you have a bad actor who can print money and they spend money to store the data, they don't need a return on investment. The return on investment is that you're slowing down Bitcoin, because the faster Bitcoin takes over, the faster you lose your ability to print money. So their incentive is to slow down Bitcoin, to make Bitcoin stumble, to make Bitcoin less decentralized, to bloat the UTXO set, to do anything they can to attack Bitcoin. So in my opinion, removing op return data limits is an attack vector on Bitcoin at this time. I think in the long term, at the top of the S curve, it is no longer an attack vector, and the natural laws of economic incentives will protect that storage and protect that through the cost of the storage versus the economic return on that cost. But right now, as we're moving through the evolution of Bitcoin from digital gold to pristine collateral, the money changers, those who have a monopoly on the financial system, are absolutely incentivized to attack Bitcoin in any way they can at any cost, because it costs them nothing to print money. And even if they print a lot of money and they lose, they just go crying to the government and say, if you don't give us the money, everybody's going to lose their money. So they print the money and give it so that everybody doesn't lose. So they have access to unlimited funds to attack Bitcoin. There doesn't need to be economic incentive for the costs that they're paying to bloat UTXO. So we should make no changes to Bitcoin. It should stay as it is. If they want to take advantage, take advantage through SegWit and Taproot, right? Don't make additional changes. Wait to make these changes until we're at the top of the S curve where it starts to make sense. Any change that be made right now, especially for reasons based on economic incentive, to me, don't make sense, because those economic incentives do not protect the space. Because the people who are trying to attack Bitcoin, they can print money and they don't need a return on investment. They don't need to get their costs subsidized by selling a service. They want to attack Bitcoin. They want to slow it down so that they can maintain power. And if you ignore that, if you don't believe that, then I think you need to study a little bit more. But once we get through this and we integrate and we move to the top of the S curve, then go ahead and remove it and let the natural laws of economics and incentives guard that space. But until then, don't touch anything.
I agree with that to 100%. And I want to add, any change to Bitcoin must have a really good reason for that change to be there. I know I'm coming actually from software development. A small change in the software can bring a problem that you haven't even thought about before and can break a system. So I don't think the system will break because we remove that limit. But why take the chance when there is, for me personally, not a good enough reason to even remove that limit in the first place? So I 100% agree with you. And I just wanted to add, change on Bitcoin has to have a really freaking good reason to do that.
Yeah, absolutely. So that's be the one. It's not really technically outside of Bitcoin, but it is, because I look at Bitcoin as money and finance, but there is that third wheel, which is community. And we need to work together as a community and run a node and signal to the network how we feel about these things and be active in the discussions and be sure that you're open to both sides, right? Nobody should be being blocked from being able to say something. That's ridiculous. And there needs to be open discussion on these things. And then if you're going to cite economic incentives, those economic incentives should be well thought out and understood where we are now in the emergence of this digital asset class that we know as Bitcoin versus where it's going to be in the long run, where some of the economic arguments they're making, you know, if you're going to put a picture of or if you're just going to store arbitrary data on Bitcoin, if you're not getting a price for that above your cost, then it's going to just disappear, right? I mean, when the BRC20 tokens went crazy, miners were making bank. There was like a day or two where the fees were more than the block reward. But if you look at the blockchain right now, it's all gone. Why? Because there was no economic incentive. But if you remove the data limit on op return and you can do unlimited data, they're going to bloat UTXO and it's going to be an attack vector on Bitcoin. The economic incentives are invalid when you're fighting the money changers. Only after full adoption can we even think about doing something like that. But that human element, it's funny because we always say Bitcoin removes the human element. It doesn't fully remove the human element, right? Because one thing I've learned is that community and running a node and participation in discussions are a key part of Bitcoin. And we should all be participating. Even if you're just now learning, there's nothing wrong with asking a question and diving into these conversations to make sure that you understand the discussions that are happening around Bitcoin at the protocol level. Because it's not just the long-term thesis of Bitcoin that is important, and the existing narratives around Bitcoin that it's important, but also the protocol discussions and the maintainers of Bitcoin who push these changes to core code, and that affects the rest of us. So we should be paying attention to those things and understand that Bitcoin is not as much of a set it and forget it as we might want it to be. Humans love to just buy it and forget about it. Yeah, but you should buy it, then you should spin up a node, and then you should project your opinion into the internet economy with your node. And that's going to lead to a stronger ecosystem.
100% agree. I love that a lot. We have an end routine in the podcast, as you know, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you an interesting question. What is the biggest goal you see yourself accomplishing in the next 10 years?
Well, as somebody who's been accumulating Bitcoin for a long time, I think that my biggest goal will actually be life itself. So thankfully right now, my wife is pregnant. We're expecting our fourth child. It's a boy. We're going to name him Luke Paul. So we're very excited to welcome him into the world later this summer. And I think the best thing that anybody can do right now is if you're a man, find a wife. If you're a woman, find a husband, and then start making your family. I mean, this is what life is all about. There's no amount of Bitcoin that can buy life. There is nothing you can do that can create life. You must find your soulmate. You must find your husband or your wife. And then when you come together and you create life with that person, and then you watch that life grow in front of your eyes, it's an indescribable feeling, and no amount of anything can create life. We don't have the power of the breath of life. So be appreciative of the breath of life. And the best thing I could do is bring as much life into the world as possible. We do, Elon Musk is one of the very few people in the world who talks about the fact that we have a depopulation problem. The mainstream narrative that what the elite have brainwashed people to think about and understand is we have too many people on this planet. There's too many people and we're running out of room. No, actually, if you go look at the Georgia Guidestones, the goals of the elite is to reduce population down to 500 million people. That's genocide. That's wickedness. These people hate life. They want to destroy it. We should create an environment in our life and in our circles that respects life and values life above everything. And the best goal that not only myself, but that anybody can do is to produce a life and to raise that life up to make the world a better place.
Congrats, man. 4 is an amazing number. I love that. Do you have are you aiming for a specific number?
No specific number. Just kind of going with the flow.
More.
more. You know, people, yeah, I need more Bitcoin. I never have enough Bitcoin. I need more kids. I don't have enough kids. This person, they're their own person. The way they smile, the way they laugh, the way they argue, the way they yell, the way they think. There's nothing more interesting to watch than a life that you have played a role in producing grow up and change and mature. And I think once people actually, you know, I think the biggest blocker, I talk a lot to a lot of my peers don't have any kids. They're not married and they don't have any kids. And, you know, I'm in my mid 30s. I'm 34 now. And a lot of my friends, they didn't get married and they don't have kids and they're still going out to Vegas to party and, going over to Indonesia to go surfing. And it's like, it's all about you. And you think you're going to be happy when you do what you want to do. But when you have another life, when you have a child, it produces a happiness in you that surfing the gnarliest wave and getting the longest barrel of your life is nothing compared to having your kid run up and give you a hug. Being able to go home and just talk with your wife or your husband, who's your significant other, and know that that person cares about you and wants to hear what you have to say. There's no experience that can deliver the euphoria that comes with having a family. So my thing would be create as much life as you can. We need it. We're going the wrong direction. We've been brainwashed to depopulate, and we need to get rid of that mindset and re-brainwash to populate so that we can get as much Bitcoin babies as we can.
It's a beautiful, I cannot think of a better way and a more beautiful way to end this podcast. We almost at exact the same time that we also did the last time, actually. It's kind of amazing. Thank you so much, CGK, for being on the podcast. Before I let you go, where can people find you, ask you questions, and reach out to the people you serve?
Yeah, absolutely. Well, thank you so much for having me, Robin. It was a pleasure as usual, and I'm already looking forward to the next one. For everybody out there listening, the best thing to do is you can follow me on X at CJ Konstantinos, but you definitely want to go to peoplesreserve.com, sign up for the newsletter, because we're going live this summer. So if you want to stay up to date on when we're going live and you want to learn about our products and services, sign up for the newsletter so that we have a direct line of communication with you, and you're always going to get the news there first. Rather than through other sources. And then there's also a get in touch form. So if you know that you want to use one of our products or services, if you're a person who's looking to buy a home and wants a mortgage, or if you're a small or medium-sized business who knows that they want to get Bitcoin on their balance sheet, or maybe you're a politician, you're a local representative, and you're interested in working with us to issue municipal Bitcoin bonds, use our get in touch form, reach out to us. We have resources, we have people. We will bring you in, we'll communicate with you, we'll teach you, and we'll do our best to help your vision become a reality, supported by our products and services.
Thank you so much, CJ Konstantinos, for being on the show. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.